Hi guys, welcome back to another video. In this video, we're going to talk about PTM Swing Indicator strategy number one, which is nothing but your VRP harvesting safe mode. We'll talk about how to make this strategy, how do you back test it, and also what is the better way of implementing it. Very simple. This is a very basic strategy, like I have told you earlier. What have we learned already? That we already learned that this PTM indicator, about the swing indicator, we have learned theory, basic theory. We have learned how to create alerts. We have learned money management. We have learned psychology also. How do you distribute your money? How do you create a portfolio? How to get access to the indicator also we have discussed in the first two parts. Now in this part we are completely going to focus on the strategy. If you remember the basic business formula which I told you for business of trading, we have completed the market structure, how to think about it, how to think about your PTM signals. We have finished that, how it helps us to bypass market structure. Now alerts, and now we're going to completely focus on your trading strategy. This is going to be a very simple strategy, and keep in mind that this I use it for generating some regular income from the market. Keyword here I'm going to tell you is slow regular income. This is a indicator for slow, non-stop, consistent, gradual increase in your income. If you are someone who wants fast money, this is not the indicator for you. I am not the right person to guide you, because I don't teach anyone how to make double, triple, quadruple your income. That is not how the markets work. That is not how any business works. All right. So let's first start making notes. I'll tell you the strategy. Before that, let's outline what we are going to learn. Let's make this notes. Let me remind you again that this indicator is only for guidance. It will help us find out the direction. It will not tell us how much profit we are going to get. It will not tell you how what to do in the market. That rules strategy you have to make on your own. The indicator itself is just a research tool. It will tell you the direction. That's all. What signal has triggered where. That is what I am using it for. You can use it for some other purpose, but I am using it for direction. Like I told you earlier, and I'll repeat it again, I'm not a SEBI registered analyst, and I am not here going to teach you how to become profitable or how to trade in the market. I'm just sharing my own strategy with you here. All right. So let's start with the notes. And the first thing we must note down is that in this strategy, we're using OTM, out of the money credit spread. Simple. We are using credit spread. I don't prefer, trading naked selling options, because this is requires a lot of experience, how to handle money, how you need a higher margin and all that. I don't recommend it. Personally, I avoid it as much as possible, right? So this entire guidelines, and with the indicator, what am I targeting? Like I said, this is my own personal strategy. So I am targeting with a base capital. So money management, I have taught you that use 5 lakh. If I'm using 5 lakh here for one strategy, this is the safe VRP harvesting, right? So if I'm using for one strategy, one portfolio, I'm using 5 lakh, I will deploy the total amount of 3.5 to 4 lakh maximum. Let me repeat this part again. I have 5 lakhs for this strategy reserved. I will use only 3.5 or 4 lakhs from this strategy. That should be clear. This will show me my business target. My business target per week, so this is a weekly strategy, is my business target will be around 1% and maximum 1.5%. Okay, this is not a compounding, this is not a quadrupling, doubling your income. This is business. Keep that in mind. Now let's start making the notes here. Very simple. First thing is volatility condition. When can I deploy this strategy? The simple answer is if the VIX is 13 and below. 13.1, I'm not interested. 13.2, I'm not interested. 13.5, I'm not interested. If the VIX is 13 and below, only then I can deploy this strategy. Now, step number one, entry time. Entry time when is the entry time? Entry time will be on the expiry day, current expiry day, last 15 minutes. For example, let me just take example here. the most recent expiry. Let me take Tuesday. So I'm using Nifty's chart. So when is the weekly expiry of Nifty? It is on Tuesday. So I'll take Tuesday here. One second. I'll find Tuesday. Yes. This is 17th March, 18th March. 17th March is a Tuesday. All right. Let me just mark it. 17th March. When is the next week expiry? 17th March. Then it is on 24th March. So right now, for example, let me take the replay. Okay. So this is my next week. Second. This is next week. This is current week. Right now, market is trading at 3:15 p.m. and I have last 15 minutes of the day of the current expiry. So I'm on a Tuesday. Sometimes there are holidays on Tuesday, so we'll take Monday, right? So whenever there's a current expiry day, last 15 minutes is my entry time. I am planning for next week expiry. Simple. This is a simple logic. There's nothing complicated here. Execution time I will do only in the last 15 minutes. I'll tell you what are the steps of execution. I'll tell you everything in detail. Just make sure that you take notes properly. All right. Now, step number 2, mark. Usually we do what you people forget to do is you forget to mark your next week expiry. So what you have done, you have found the entry date, you have marked the next week expiry. This is simple step, very basic step. But why am I doing this? Why is this an important step? Because you want, like I said, you're doing positional trading, right? You're doing swing trading. What I need to do, I want clarity in the market structure. I want clarity to, I want to understand what is happening here. This is my target zone. I don't care about what will happen after that. I don't care about what happened before. This is where my focus has to be. So it is very, very important that you draw the next week expiry, you mark it. So next week expiry is, suppose this is 17th March, this is 24th. Just mark that day. We're using 1 hour chart. Okay, we're using 1 hour time frame. Just mark that day. All right. Now, since you have your target day clear, we have target clear, we know when to execute. Question is now what to do. First thing, current expiry, we are currently trading at 3:15 p.m. We are planning for next week expiry. What to do? Very simple. I'll tell you. The only thing you must do here is first, the last 15 minutes. What I do is, this is the current 17th March, last 15 minutes. This is step number 3. Last 15 minutes of the day, current expiry, I have to check where is the big bull or big bear signal. What is the latest yellow color signal? Let me repeat, in this strategy, safe harvesting, we are not using the blue color signal much. This is not, there's only one small purpose for that. I'll tell you what is the purpose, but we are not using blue color signals. Okay. We're not using blue color signals. Our main focus has to be on the yellow color signal. What did I tell you again? Let me repeat it. At 3:15, last 15 minutes, I have to check what is the latest yellow color, which is the big bull, or is it big bear signal? Which one is it? Here in this example, it is a big bull signal. Okay. So what I must do is I must draw the range. Draw the range. Draw the range of the candle. Simple. I have to draw the range of the candle. Now, take this note, very important. We are still in step 3. If it is a bull signal, my plan for next week in my last 15 minutes of the day, I have to create what? I have to create a bull put spread. Okay. If it is a bull signal. Similarly, if it is a bear signal, I have to create a bear call spread. Simple. We already know what is a bull put spread. Bull put spread means first leg, you are buying far OTM put option, then sell far, sorry, near, not very far away. I'll tell you how to do strike selection and all that. What is my method? Near OTM. Again, OTM only, put option. We know how to do this. Exact same opposite for this. This is we buy far OTM, your call option, and you short near OTM put option. Sorry, call option. My bad. So this is basic spread. I think everyone knows this, what a basic credit spread is. And the logic here is we are using credit spreads. So signal is bull. So I have to use my bull put spread. Okay, I have to create for next week. So what I've done is, this is where I will create. I'm just making the notes. We'll go into testing, back testing, everything we'll do, and we will check everything. Now comes step number 4. It's called adjustment. Okay, adjustment rules. We are planning to play safe. This is my safe VRP harvesting method. So what I'm doing here is, when anytime, first rule, anytime inside the adjustment rules, note this, as long as price, I have executed my trade here, execution done, last 15 minutes. Now anytime the price is above my marked range, we have marked it, right? We have marked the latest big bull or big bear signal. We have marked that range. Anytime for the next week, from this expiry to this expiry, if price is above, this is a bull signal. If price is above this and it is continuing in the bullish direction, I don't need to do any adjustment. First adjustment rule. Next adjustment rule. If market, let me just play forward this signal. Let's see what happens. Okay, see what happened here. Market dropped, correct? So if any time in this week, when after I have executed, if the range breaks, what I must do, I must exit old position. Very clear. Anytime this range breaks, I have to exit old position. Then immediately I have to create the opposite side position. So here I created a bull put spread, correct? So when this zone broke, immediately I have to create what? Simple. I have to create your bear call spread. Simple. So the zone broke, I became bearish. As long as price is above it, I am bullish. Simple. Now what we're going to do is, we must understand, what if, sir, we had a starting point first yellow color. Okay, as soon as we started, last 15 minutes on the expiry day, we checked the latest range. We check the latest yellow color candle range. Simple. I have done that, and I have used that as my important pivot zone, above that bullish, below that bearish. Correct? So right now what I'm going to do is, what if there is a new signal which came here? What if there is a new yellow color signal? We have the range, weekly range, and there is a new yellow color signal. You are going to change this to the latest one. You are going to change it to the latest one. So this zone importance is over when there is a new yellow color signal. You change it, you mark the new signal, mark the new zone. Now this is your new pivot zone. As long as price, this is a bear signal, correct? So as long as immediately as this comes yellow color, I have triggered the OTM. What is this? The bear signal. So what is my strategy here? OTM, your bear call spread. So this is a bearish signal, bearish trade for this. Simple. I have triggered that. I have to exit the old position. If it is not bearish position, then I have to exit. It's common sense. I don't need to tell you. If there's an opposite direction signal, so from bullish, we became bearish here because the signal changed. Simple. If there is again a new bull signal here, if there is a new bull signal, I don't need to do anything. I don't need to do anything. I'm already in the bullish position. This is personal choice. You can again shift if you want. But personally, I don't need to do anything. I don't need to give extra charges to the market. I don't need to create a new position. I'm already in profit. All right. So when there's an opposite color or when there's a second yellow color signal, big bear bull, big bull in the same week, that time you have to shift the pivot zone. You have to change the pivot zone. This point has to be very clear. Last point is that we are going to see a very good example where after your execution, you get, let's say, okay, here itself there's a very good example. Let me just mark it. Okay, here, look at this example, very important. You understood so far that from here we shifted our pivot zone to this point. We have shifted. So this is our latest pivot zone. Now listen to this very carefully. When I have latest pivot zone, my new position, this is a new position. This was the first position here. Okay, this is the first position. When I have this, if there is any small bull signal, so this is opposite direction. Keep that in mind. These two are opposite directions. Bear signal is big bear, small bull. If there is any bull, small bull signal inside the pivot zone, if there is any small bull signal inside the pivot zone, I'll repeat this point again. My latest current pivot zone is bear. This is a bearish pivot zone because of the big bear signal. And in case this opposite small signal, opposite, so what, this is a big bear and opposite small bull has formed here. Big bear, small bull has formed inside the zone. Then I have to exit all positions. That has to be very clear. I have to exit all my positions. Simple as that. This has to be crystal clear. There has to be no doubts in this. I have to exit all positions. Simple. Wait for next day. Wait for next day or wait for new big bear or big bull signal. This is a very important rule. Don't forget this. Very important rule. Here you see that, sir, already bull signal discontinuing. Why did I exit? All that. Don't worry. This will save you in very, very dangerous situations. I'll show you one very good example of this. I think all of you remember when US-India trade deal got announced here. The 1st of Feb was your expiry day. Wait 1 second, let me just check. No, your expiry was here. Tuesday, 3rd Feb. Okay, this is your expiry day. Simple. And before that, what did we have? Before the expiry in this entire week, we had a yellow signal. So in the week, we had a yellow signal. So this is my new zone. This is my new pivot zone, correct? Latest new pivot zone. And I have bearish position. I have bearish position. Now I have created a bearish position in the market because I got a new big bear signal. New pivot zone, new position. Market fell. Very good. Same day, what happened? Opposite. This is a bear, big bear signal. I got a small bull signal inside this zone. I got a small bull signal inside this zone. What do I have to do? I have to exit all positions and I have to wait for next day. What happened next day? The biggest rise, biggest gap up in nearly 10 years. Biggest gap up. Right? So this is how it saves us sometimes. This is some rules we follow to save ourselves from unwanted gap ups. Like I told you from the first video, we need to apply some method to safeguard on overnight gaps. So this is one of the method and very important method. All right. So far, you have understood what? You understood entry time. You understood your adjustments. You understood your strategy which we are using. That is your spread strategy. Bear. I'll talk about bear spread and bull spreads in detail. Don't worry about it. Right now, we have just made some notes. Last note we are going to do is about exit rules. What are the exit rules? First, if you are already in profit. First rule: if you're already in profit, and then no need to worry, you can exit on your expiry day morning, or you can whenever your target hits. What is the target again? 1% to 1.5% maximum. Okay, that is one of the exit rules. Next exit rule: if SL, sir, what is my stop loss for the week? Weekly stop loss. I'm not telling about trading stop loss, I'm talking about weekly stop loss. Weekly stop loss, whenever you enter a strategy. So whenever you enter the strategy here, suppose I took an entry here, planning for the next week. At this point, you will get one profit in your demo account. Whenever you're practicing, I will see some profits. For example, it is around 4,000. Around 4,000, I'm seeing the profit. This is my SL. If whatever profit is showing, right, expected to make 4,000 this week, right, this is my SL immediately. Or again 1% SL. So 1% profit we are targeting, and 1% is the weekly risk. If any time due to gap up, gap down, or you made any mistake, if 1% is hit, exit that week, wait for next week. That's all. This has to be a very powerful rule, and keep that in mind, that I have given you two types. You can keep fixed 1.1%, 1% rule, or you can keep this 4,000. 4,000, whatever profit. When you're creating the strategy, you will see expected profit in your demo accounts. So that time in your demo accounts, when you're practicing this for 1 month, your SL can be whatever profit. So 1:1 risk reward ratio type. All right. This is very, very important. Learn this method. Most important in all this, all the rules, all the notes I've told you, everything, the most important part is the last two, which I told you: SL rules, exit rules, and also the adjustment if in the pivot range there is an opposite small signal. This is the most important two rules here. Very important. I think most of you will understand so far what I'm telling. What we're going to do right now is we are going to go into the charts. We will start applying all the rules. We'll do some back testing, and through this process you will understand how to do back testing whenever you get a strategy, whenever you want to make a strategy, how to improve a strategy, how to build a new strategy. All that I will teach you right now. We'll talk about back testing first. All right. So for back testing, I've already told you in the intraday guide videos also. This is a swing guide video series. In this series also, I'm telling you that I am using stock mock platform, and I'm using the simulator for going back in history and creating strategies as per the data back then. So if you go back to your VIX chart, why are we checking VIX? I told you in the beginning itself. Very important. First option in our notes, what was it? You have to check, we have to deploy this strategy only when the VIX is below 13. So I'll just directly draw one horizontal line. I'll mark the level of 13. Okay. So here this is 13. I'll just go to a weekly chart and just see which week, because we are planning for next week, right? I'll just take recent examples. This is right now we are trading in the month of March. Before that, which week was below 13? So remember, check always 13 and below. This is November. Okay. So December full was December of 2025 was below 13 level, and January 1st, I think first 2 weeks is below 13 level. So we'll do some back testing there. I'll show you how are we executing the strategy. So December month and January. Let's go and check. Nifty. Same process for all the whatever indicators you're using, whatever scripts you're using, stocks or whatever. So we are looking at December month end. So see, This is an important rule. You can see that December month, I don't have any signals. Why, sir? Why December month and before that I cannot see any signals? What do I do so that I can see the signals? Do simple thing. Just go to replay button here on trading view to check historical signals. Go to replay button. You need replay feature to check all the historical signals. So what I'm going to do, I'm just going back. I'm selecting replay from first. So now you see that I got historical till October, November I got. So again, if I want new signals, historical signals, just click here and you will get the last few months, you will get the signals. This is not my setting. This is based on TradingView's limitations. It cannot show you all the signals throughout history. It will show you for a few months only. Okay. So right now we want to see signals for January month and December month. Go to replay and go to Feb. Okay. Now, January month and December month, as far as I recall, is two opposite months. It's a very good two different months for testing, because you see, let me mark January month first and December 1st, December 31st, January. Okay. Right. If you see these 2 months, very important. December month was sideways, consolidating and compressed. If you see your month of January, you can see continuous trend moves. Okay. Full month was trending. December was sideways. So your strategy, whatever you build, must work in both the cases. It must work in both the cases. Now, what mistake people make here, I'll tell you. For example, in your back testing period, and I want to take the expiry of Jan. All right. I want to take the expiry of Jan month. When they go to your first week of Jan, when is the expiry? Let me go to my simulator. I'll check the date. So the first expiry of Jan month was on 5th of Jan. Sorry, 6th of Jan. Okay. So when does this start? When does the monthly expiry? When before this, when is the date? 30th of December. And from 31st of December, your Jan monthly, your first week expiry starts. This is common knowledge. But what people do mistake, instead of, like I told you, instead of selecting your December 30th last 15 minutes, people will start from January 1st, thinking new year will start from there. No, don't make that mistake. Note down your expiry dates properly. So what did I tell you in the rules? You have to mark your expiry dates properly. So what we'll do here, we'll just mark it. We'll mark the dates, and January 6th is the expiry. This is my expiry. January 6th, correct. And 30th December is my previous expiry. So right now we already have the charts, and we are going to create strategy for testing this move, this entire move. How do you apply the strategy we are going to see? Okay. So what I've done here is I've split the screen. This is a very good method of testing. You can do this for yourself also in your own screens. You can split the screen, one for testing the strategy and one for your charts. Charts you're not going to use much. You're going to use your screen testing here. So you can split the screen like this. It's very simple. You know how to do it. I assume you know how to do it. What are we going to focus on? I'll tell you one by one how to select the strike price. Okay. Very simple. What are we going to do now is we are standing where last 15 minutes. This is where we are. This point. This is current expiry. This is 30th December. 30th December. Now we are targeting 6th Jan expiry. Okay. So right now I have to create position in the last 15 minutes. Last 15 minutes I have to create. Before that, what do I have to do? Before I create my position, I have to find what is the latest yellow color, which is the latest big bull or big bear signal before I create the strategy. I have to check that. Okay. So here I can see that there is a big latest signal is the big bear signal. So I have marked the range. Now, what is the meaning of marking the range? I have to check whether price is trading below it or not. Regardless of it, last 15 current, its price is trading below it. there is no signal in between. Okay, this is the last 15 minutes. Let me zoom in so it will be very clear for you. Okay, zoomed in. Here we are on this line, exactly on this line. So what I'm going to do right now, if you see the right side of the screen, I'm going to the date of 30th December. 30th December. This is Tuesday, expiry day, weekly expiry. And what I'm going to do right now is last 15 minutes. So select the time 3:15. Okay. Now I've selected the time. Next part. After this, what is the next simple step? Strike selection. Before that, make sure you have selected the correct expiry. I have to check the strike prices of 6th of Jan. I clicked it, 6th of Jan. Simple. 6th of Jan I have done. Now strike price. The important rule of strike price is that we are selecting. So here, this is a bear signal. I am creating a bearish call spread. Out of the money, bearish call spread. Simple. I think you already know what a bearish call spread is by now. So this is your at the money, ATM, and this is all OTM. Okay. Strike price selection rule, which I follow, very simple, is that I want to select the difference between my short leg, selling leg, and my buying leg hedge should be approximately 10 to 11 rupees premium. I'll repeat this point again. The difference between my shorting leg, my short leg, which is your call short, this is a bearish signal, so call short, and between my call buy, that is the hedge, it should be 10 to 11 rupees premium. All right. Then the call short should not be greater than 20 rupees premium. Call short, that level, that strike should be not greater than 20 rupees premium. That is all. This is a simple rule. Simple. So let us go back to the option chain here. If you see, what is my options I have? What are the choices I have? My shorting leg should not be greater than 20 rupees. So below this, where is 20 at this point? Exactly at 3:15. Any point after this, I have to select my shorting leg. Okay. I have 18 rupees, I have 13 rupees, whatever. 9.9, 9.4. All right. So what I'm doing is I'll take 13. I'll short this. I've taken 13. Then I have to buy, right? I have to buy leg. So what did I tell you about buying leg? The difference between my short and my buy should be 10 rupees premium. So I have 13 as my short leg. So around 3, I have to do the buying. I have done it. All right. So if you see the premium on the right side, go to the right side here. You can see the difference. My short leg is 13 rupees. My buy leg is 3 rupees. My short leg is less than 20. Okay. It has to be less than 20. That is the rule. All right. Done. Now, what is the lot size? So personally, what did I tell you in my own money management? I've told you 5 lakh is one portfolio strategy. Portfolio, right? Strategy portfolio. 5 lakh is minimum required. So I am deploying what as per rules, what did I tell you as per notes? Around 3.5 to 4 lakh. So that is how I have to select my lot size. So I'm increasing it. Estimated margin you can see is 50,000 for one lot. I'm increasing the size, 2 lots, 3 lots, 4, 5, 6. We have reached 3.14. Now 3.67. So totally 7 lots I have used here. Totally 7 lots I have used, and 3.67 has been locked. Remaining, I'll leave it. Remaining, I don't need to apply. Done. So that's all. Now what I have to do is I just have to go forward. I am currently on 30th December. This is where I am. This is the candle and this is where I am. Okay. So next day morning is 31st December. Next day morning, 1 second, I'll just remove this. Okay. So next day morning, you can see is 30th December, and you can see what happens here. You can see opposite color. Small bull has formed inside the range of big bear. What should I do here? As per rules, I have to wait for this candle to close. So this candle will close, started at 9:15, it will close at 10:15. So I have to make the changes in my simulator, go 5 minutes forward, 15 minutes forward. I have to go to 31st. I have to select 10:15. Okay, done. 10:15 selected. What is the rule here? I have to exit my position because I have to exit all positions. Simple as that. I have to exit all positions. First candle itself, we have got the signal. We have understood that big bear signal. Inside that we have a new small bull opposite direction, right? Opposite direction, small bull signal has come. Exit my strategy. Whatever position I have to exit. Now I have two options. I can wait for next day, or I can wait for new bull signal. New signal will come, because when the new signal comes, what will happen? I have a new pivot zone. I have created a new pivot zone. Simple as that. So when did this signal come? It came at 12:15. So what happened? Market, it gapped up, it rallied till 12:15 1 hour candle. So 12:15 1 hour candle, 12:15 is the start time. It will close at 1:15. Correct? So in my simulator, I have to select the time 1:15. 1:15. Okay. Now I have a new pivot zone. I have a bullish signal. Simple. New pivot zone, bullish signal. So what do I have to create? What strategy for a bull signal? I have to create bull put spread. Same rules. Same rules here again. Let me mark where is that option chain. Okay, option chain, put side. This is the ATM. And this is all the OTM side. This is the OTM, right? This is the put side. This entire thing is a put side. So put OTM. What I have to do is first I have to mark where is 20 level. This is 20 rupees premium, and below that only I have to select my your prices. So your short, what do I have to do? Short price. Like I said, short I will do for your call leg, sorry, put leg short. I have taken as 18 rupees. It's below my thing. And then I have to buy exactly 10 rupees difference. I have to buy the hedge. So 18, I'll take 8. Okay, 18 and 8, simple combination. So you can see here right now, first strategy of the week, SL was taken. Now I have second strategy. I have created the second strategy. Question, what is my stop loss for the week, sir? What is my stop loss? I have created the strategy. You can see around 3.7 lots. I can increase one lot and check how much I have to pay. 3.7, no problem. I'll pay this much. What is my maximum profit here? You can see 4,400. 4,400 is my maximum profit. It is greater than 1%. Greater than 1%. What do I have to do? My SL is the same, 4,400. 4,400 becomes my SL. Simple rule. You can follow this, or you can look for same exact 1:1 ratio. So 1% SL, 1% profit type that you can manage. So here I have put 4,400 as my weekly SL. So if this strategy hits 4,400, I have to immediately exit. What happens after this? You can see market goes sideways and it rallies. Okay, market goes sideways and rallies. So how does our market work? Let me just run simulation here. I will increase. You just focus on this part, and you can check the date also. We are on 31st. This is the 31st. This is Friday. This is your Monday 2nd, and this is Tuesday. Sorry, this is Friday. Sorry, this is Friday 2nd. This is Monday, and here this is your Tuesday. We start. This is Monday, and Tuesday is the expiry. Okay, so what we're doing is right now we are on 31st Thursday. We are going, so it is Wednesday, and we are moving one step ahead. One step ahead. 2 hours, 2 hours. I'm just increasing. We are on first now, and you can see the profit has increased to 1,700. No changes. I don't have to do anything. No new signal. Nothing. No changes. I have 1,700 profit. Move up. Next day I started, your 2nd of Jan, 3,200 profit already. We are trading up here. in this upper range, and I'll just keep increasing the time. We'll go forward 5th of Jan. Now we are Monday. We are 3,900 in profit. Okay, so where are we Monday? We are here, this part. This is Monday. We are here. Market takes a fall. Market takes a fall. Let us see what happens to our profit. Let me increase the time towards Monday 1:30. We are 3,900 profit. Now we have started the next day. Next day, Tuesday, we have nearly morning first candle 9:30. What is their exit rules? When your profit reaches exit or on your expiry day morning itself, you can exit. SL comes exit or your profit comes exit. Simple rule. 4,300 we achieved. Our maximum profit is 4,400, so 4,300 itself I will book out my profit. As simple as that. This is the most basic strategy, nothing complicated here. Now what I want you to do is I want you to test what happens in like market like this, in this kind of a market, in this trending phase. So in this trending phase, for example, I want you to test two situations. This is 6th of Jan. Market is here. Okay, 6th of Jan, market is here. Last 15 minutes. Go and mark your latest signal. Latest signal is bear signal here. And I have to create a bear strategy, and market immediately went one single direction, right? So test that. And last, I want you to test. I'll give you an example. I want you to answer this question. Recently, we had the Israel and Iran war, which started in the Middle East. All right. This happened on the 27th or 28th, that is over the weekend. And on Monday, this was Friday's price action. This is 26th of March. Let me just check. Okay. So this is 27th of March. 26th, 27th of March, and this is 27th of March, Friday. My question to you, I want you to go and tell me in the comments what strategy should have been executed. So Tuesday, this is Monday, and this is March 2nd, and Tuesday is a holiday. Monday is the expiry. We started your expiry before here somewhere. I want you to tell me, should you execute a strategy in this scenario, yes or no? And reason why. Tell me the answer in the comments. This is a very tricky question because you can see that this is Tuesday. Okay, this is Tuesday. This is your next expiry. My question to you is, should you expire? You can see the latest bear signal is 12 days before. 12 days before, that is a big bear signal. So what you have to do is you know the rules how to execute. My question is, should you execute a strategy in this move or not? Should you, yes or no? And tell me the reason why in the comments. Let me know if you have understood the strategy. This is the most basic strategy. I've given you all the rules. In the next video, what we're going to do is we are going to implement aggressive mode. We are going to do some aggressive. We have profit of 4,000, right? We know how to get 4,000 profit, 3,000 profit. We know 1% profit. Is it possible that can we increase this profit? We are going to learn the same method, but we'll do some adjustments. We'll do more adjustments to try and increase our profit. I'll see you in the next video. I hope you understood the strategy. It's a very simple strategy and all the rules have been shared with you. I'll see you in the next video, guys. Till then, take care and be safe.